The world is a place where money is the determinant of the power, and power is the determinant of whoever is in charge. There is a strong, dark alliance that most humans will never detect. It is not concerning business people or politicians. It is concerning a closer relationship between banks and governments. This alliance has defined wars, dictated economies, and made decisions without much ado concerning the destiny of nations. It is not mentioned in history books, but can be seen in every coin, every law, every debt. This is how the banks and governments have a secret alliance. To look at the birth of this liaison, we must go back centuries before modern banking. Imagine Europe in the 1600s. Kings and queens reigned, and wars were draining them of money. The empires required a great amount of gold. Armies required food, weapons, and soldiers. The kings got desperate and needed money, so they resorted to another group, bankers. Such families as the Medicis in Italy and Rothschilds in Europe were not just lenders. They were an invisible lifeline to kings. They financed wars, constructed vessels, and furnished armies. They obtained in their turn something more valuable than gold: influence. Whenever a king took money on loan, it cost him a bit of power and made him more dependent. Power shifted off the throne onto the bank vaults. It was the individual who reigned, and not the crown. Since that time, a silent alliance was established. Governments provided legitimacy and armed force. Bankers provided currency and power. They both constructed a system that was dominated not by armies, but by economics. This turning point occurred in 1694, when the Bank of England was founded. It was the first occasion that a central bank was established to hold money and also to issue money. The government required funds to wage war with France, and the private bankers discerned an opportunity. They would advance funds to the government on interest, and in return, they received the privilege to make cash guaranteed by such a liability. This was revolutionary. It implied that money was not merely a trade instrument anymore, but a debt product. The government had unlimited ability to borrow, and the central bank dictated the entire supply of money. This model was disseminated in the next 2 centuries. Similar systems were followed in France, Germany, Netherlands, and subsequently in the United States. Governments put forward central banks as social institutions that were to stabilize economies. However, these institutions were very much bound up in private financial interests behind the curtain. It was a system that was founded on deception, a system in which the two parties purported to be independent, yet relied on each other secretly. Money was required to keep the state alive. The banks had to have strength to develop. They joined forces and became invincible. Fast forward to 1913. The United States, following a series of banking crises and political battles, saw a small group of mighty financiers convene in secret in Jekyll Island, off of Georgia. These included big banking family representatives and political elites. They were to create a new central bank that will quietly manage the supply of money in the country. The establishment of the Federal Reserve System was the result of that secret meeting. Although it is named Federal Reserve, it is not quite federal, and it does not hold any reserves in the traditional sense. It is a combination of a publicity and a secretive front, and regional banks are dominated by strong financial powers. The Federal Reserve is one of the strongest bodies in the world since its establishment. It is able to print money out of thin air, dictate interest rates that impact the world markets, and choose who would be assisted in times of economic disasters, all without the direct control of the people. In the 2008 financial crisis, where mega banks gambled and lost trillions, the Federal Reserve started printing money in order to rescue them. No major banker went to jail. The collaboration instead became closer. The governments purported to be bailing out the economy, but in actual sense, they were safeguarding their financial partners. The common people were deprived of their houses, jobs, and hope, whereas the financial elite ended with bonuses. The message was simple. Regardless of what will happen, the partnership is intact. Debt means power in case money is power. The entire contemporary economy is constructed on debt. Government, corporate, and personal debt. It pervades, and it was meant to do so. Whenever a government cuts money, it does not make any actual wealth. It makes promises. Issues that should be compensated with interest, the taxes of the future, the productivity of the future, and the generations of the future. The heavier a government relies on the finance system that finances it, the more it will be indebted. This is made possible through a process known as fractional reserve banking. It allows banks to lend money several times over the money they possess. When banks lend money, they literally create money. When every dollar is deposited, banks are able to lend 9 more dollars, which are not in existence until they are borrowed. And to what advantage does this cyclic process of creating and repaying benefit? Not the public, not the taxpayer, but the alliance, the bankers that make a profit on interest, and the governments that spend such borrowed money to support their authority. Debt is the chain which binds countries, governments, and people. It is the unseen network of the present-day slavery, nonverbal, legal, and violently efficient. History has shown one pattern over and over again. Crisis equals opportunity. The alliance between banks and governments doesn't fear financial disasters, it thrives on them. Each crisis creates fear. Fear allows control. When markets crash, people demand action, and governments respond often by giving even more power to banks. In 2008, massive bailouts were sold as emergency measures. But what happened after? The largest banks became even larger. Wealth inequality exploded, and trillions in taxpayer money flowed upward from ordinary citizens to corporate executives and political allies. The same pattern is repeating today through inflation, stimulus programs, and endless debt. Crises are not accidents. They are the reset buttons of the alliance. Each one strengthens the grip of financial power over political systems, while the public is left weaker, poorer, and more dependent than before. Now we stand on the edge of a new era, one that could redefine financial control forever. Physical cash is disappearing. Every transaction, every payment, every purchase is becoming digital. On the surface, it looks convenient, faster, cleaner, and safer. But underneath, it's a system of surveillance. Governments and central banks are developing central bank digital currencies, digital versions of national money. But these aren't cryptocurrencies. Unlike Bitcoin, they're not decentralized. They're fully controlled by the state. With CBDCs, every transaction can be tracked in real time. Every account can be frozen. Every citizen's financial activity can be monitored, restricted, or even erased with the click of a button. Imagine a world where your money expires if you don't spend it, or where your account is limited because of your political opinions. That's not fiction. It's the future the alliance is quietly building. The goal is total control, a financial system where freedom isn't granted, it's programmed. This dark alliance doesn't stop at borders. It operates globally through institutions like the World Bank and the International Monetary Fund. These organizations claim to help struggling nations by offering loans and aid. But every loan comes with strings attached, policy conditions, privatization demands, and austerity programs. Once a country accepts these loans, it becomes trapped in a cycle of dependency. Its economy is reshaped to serve foreign investors. Its industries are sold off. Its currency is devalued. Its sovereignty slowly fades away. This is how the alliance extends its reach. Not through armies, but through contracts. It doesn't conquer land, it conquers economies. And nations that resist often face sanctions, market manipulation, or isolation. It's the same story everywhere from South America to Africa to Asia. The alliance between banks and governments doesn't just control money, it controls destiny. One of the greatest illusions of our time is that central banks are independent. They claim to be separate from politics to act in the best interest of the economy. But independence doesn't mean accountability. It means insulation from the people they're supposed to serve. When central banks raise interest rates, inflation rises, and ordinary citizens suffer. When they print money, the rich get richer while currencies lose value. These decisions are made by unelected officials, people who operate in the shadows, beyond public scrutiny. And yet, when their policies fail, they face no consequences. Governments blame the banks blame the government, and the cycle of confusion continues. In the end, both sides win and the people lose. So who gains from this alliance? It's not the average citizen struggling to pay bills. It's the small, powerful circle at the top, the financial elite, and the political class. For them, the alliance is a shield. It guarantees protection, profit, and power. Crises bring opportunities. Regulations bring loopholes. And the endless flow of debt ensures that the machine keeps running, powered by the labor and taxes of ordinary people. The truth is simple but devastating. The alliance between banks and governments doesn't exist to serve society. It exists to control it. As we move deeper into a digital, globalized world, this alliance grows stronger. But there's a shift happening, a quiet resistance. Blockchain technology, decentralized finance, and alternative economies are rising. They threaten to expose the old system for what it truly is, a structure of control disguised as progress. That's why governments and banks are fighting back. They fear losing dominance over money because if they lose control of money, they lose control of people. The next decade will be crucial. It will decide whether humanity moves toward freedom or deeper into a world where money is no longer a tool, but a chain. The alliance between banks and governments is not a conspiracy theory, it's an open secret. It's written in history, visible in crises, and felt in every paycheck. It's a partnership built on necessity, sustained by greed, and protected by ignorance. For centuries, it has shaped empires, toppled leaders, and manipulated economies, all under the guise of stability. But no system of control lasts forever. Every empire falls when people begin to see the truth. Because once the illusion breaks, once people understand how money, debt, and power are intertwined, the alliance begins to crumble. And when that day comes, the balance of power may finally return to where it belongs, to the people.